What is going on, investors? Hopefully you guys are doing well out there. It's time to kick off banks earnings season. We take a look at JP Morgan, ticker symbol JPM. Over the last year, stock's up about 19%, but after reporting Q4 earnings, we're seeing in the pre-market that this stock is trading lower by about 3%. We'll dive into these numbers and we'll see what could be causing at least the initial drop in shares of JP Morgan. We'll take a look at the revenues, the profits of each of the different divisions. And I tell you what, one of the reasons why I love looking at bank stocks, look, maybe you don't like to invest in bank stocks. Maybe they're not for you. I still think they're worth looking at because we get a look, especially when we're looking at a bank like JP Morgan, we look into the consumer strength and we also get to look into business strength as well. We'll take a look at loans. We'll take a look at deposits. Those tell us a lot about the consumer and business in the economy. Now, we'll also take a look at this from a technical perspective, some interesting things going on with JP Morgan stock. We'll see if this pullback creates a buying opportunities in shares of JPM. Now, earlier this week, the CEO of JP Morgan, Jamie Dimon, said that the consumer is in their best shape ever, and we'll see evidence of that when we come over here and look at JP Morgan's financials. But Jamie Dimon did note that to expect a volatile stock market sometime in 2022. Now, in terms of the Q4 earnings, they came in with revenue at about $29.26 billion. That was actually down 3% year over year. I'll show you that here in a moment. They did have those all critical provision for credit losses. That was a net benefit of about $1.3 billion. So that did bolster up their EPS and their earnings. I'll show you that when we get to those slides. Now, in terms of what JP Morgan did in the most recent quarter, here's their CCB, which is their consumer banking. And what I noticed is we still have average deposits up 20%. And I know that does show that you do have a lot of strength out there. Consumers are putting money into the bank, even though we have near zero interest rates still in terms of deposits. People are still lining up and depositing money into a bank account. It's unbelievable. And people are willing to not borrow money. Take a look at this. Average loans, at least not necessarily. We're not seeing a strong demand for loans. And I'll show it to you from a car loan and a home loan perspective. As you know, as a consumer out there, home prices have been skyrocketing. Even used car prices of all things have been skyrocketing. And we're seeing actually evidence that maybe consumers are starting to reject those prices. We'll talk about that not only from JP Morgan's perspective, but from a macro environment perspective as well. From the business side of JP Morgan, we're still seeing the same story. Average loans are actually down, but deposits are up. And so it's just showing you there's kind of this a little bit of a risk-off move still in these markets when it comes to banking. When there's a risk on movement, you see people take deposits out of their bank because they're super confident, and then they go borrow money. They go buy a house, they start a business, they buy a car, they do those types of things. Well, we're still seeing kind of a risk off move and when it comes to not only consumers, but businesses as well. In terms of entire JP Morgan business, here's that net revenue coming in at $29.257 billion. We talked about how that was down 3% year over year because last year in the fourth quarter, we were sitting at 29.335. And in the third quarter, so just one quarter ago, we were sitting at 29.647. So we're seeing a decline year over year, but quarter over quarter as well on that revenue side. Again, it's evidence of people not necessarily willing to take out loans to the degree that would grow JP Morgan's revenues, because as you know, banks, the way they make revenue is they take in deposits and then they loan out that money. And right now at the current time, JP Morgan is taking more in deposits than they're able to lend out. Now, what I also noticed with JP Morgan is we have this non-interest expense that also went up. And so we see in the fourth quarter of last year, we're sitting at basically $16 billion in expenses, and it ticked up quite a bit this year, up to about $17.88 billion. So you guessed it, when your revenue declines and your non-interest expense increases, yeah, your net income actually declined quite a bit. Okay, you went from $12.136 billion last year. Now you're sitting at about $10.4 billion in the previous quarter. This is on the net income side. The profit side, you're sitting about $11.7 billion quarter over quarter. We're seeing declines in year over year. Now, in terms of the consumer bank, this is basically your average Joe consumer like myself and probably most of you watching out there. Your credit cards, your home lending, and your automobile loan that you might have with JP Morgan. We have net revenue coming in at this $12.27 billion. Again, that is down quarter over quarter. It is also down year over year, down about 4% year over year, and down about 2% quarter over quarter. So we're seeing a decline on that revenue because here's what I want to show you. Now, consumer and business banking, that actually held up quite well. That was up 7% year over year. You went from 5.7 billion up to this 6.172. But I think more specifically, and I think what gives us a window into this economy is take a look at home lending. Okay, I don't need to go on about how home prices have just absolutely skyrocketed. And anytime you have the price of something skyrocket, eventually it does impact demand. It does impact people wanting to buy that because as price goes up, obviously demand starts to wane to a certain degree. Now, take a look at this. In the fourth quarter of last year, JP Morgan did about $1.45 billion worth of home loans. Last quarter, in the third quarter, they did $1.4 billion. Well, take a look at this. It fell off a cliff, down 26% year over year, down 23% quarter over quarter, down to about $1.1 billion on that home lending side. Maybe it's just the home market, but take a look at card and automobile loans. We obviously know automobile prices have also spiked as well. We were at $5.5 billion worth of revenue in that segment. We're down about 9%, down to about $5 billion there. Now, what also unfortunately has gone up for JP Morgan is this non-interest expense. You went from $7 billion up about 10% to about $7.7 billion. So when your revenues decline by about 4% and your non-interest expense increase by about 10%, well, you guessed it, that is going to impact your net income. That came in at about $4.227 billion. Last quarter, we were at this $4.3 billion. Last year, we were about 2% higher at $4.325 billion. Now, the last segment of this business that I want to take a look at, they've really got 2 or 3 big segments over at JP Morgan, is this corporate investment bank. This gives us a window into corporates and into business. Again, we're seeing revenues actually hold up a little bit better here, okay? Basically flat year over year, just up 2%. You went from 11.35 billion up to this 11.5 billion, but quarter over quarter, we're actually down 7%. You went from 12.4 billion down to this 11.5. Could be a little seasonality, could be a customer mix over at JP Morgan. We're not going to really weigh in on the quarter over quarter. Year over year, you do see some stability there, at least on that net income side or that net revenue side, excuse me. Banking side came in at 5.2 billion. That's up, wow, 20% year over year. You're at 4.1 in the previous period. You're at 4.9 a quarter ago. That's up about 8% quarter over quarter. Market and security services, this was impacted by interest rates. We'll see in future quarters if this can rebound, but you were down 13% and 17% respectively year over year and quarter over quarter, down to about $6.2 billion. We come down to our non-interest expense here. That ballooned, okay, 18% year over year. JP Morgan really saw their cost increase over at their company. Non-interest expense coming in at $5.8 billion. Last year, we're sitting at 4.9. That is going to impact our net income, and it did very negatively here. So despite net revenues kind of holding steady, up 2% year over year, we saw these increase in cost accelerate to decline our net income by 9% in this business unit from 5.3 billion down to this 4.8. So in a nutshell, I think when we're looking at JP Morgan, and I think what investors are kind of digesting are the fact that consumers and businesses are still putting money into the bank and are starting to reject, at least from the consumer side. It looks like to me it's not concrete evidence, but I think we're starting to see a little bit of evidence, at least when we're looking at JP Morgan. That's why I'm going to follow this up and look at a Wells Fargo, and we'll certainly look at Bank of America as well. It looks like to me, at least with JP Morgan, consumers are starting to reject the high prices with homes and starting to reject potentially high automobile prices as well. Now, they're still paying them, but it looks like to me they're starting to reject those as we see those loan volumes start to contract. The other thing that we saw not contract but actually increase were these non-interest expense over at JP Morgan really took a hit, I think, for the most part on those earnings. Now, from a technical perspective, the stocks, even though it's pulling back, so yesterday it was up here at about 168, okay? It was actually near the top of what I would call a range. It's pulled back about $4 or $5 per share. Now we're down here. We're starting to fill this little tiny gap down here. We're filling that to about 163. Now, it wouldn't have me necessarily super concerned from a technical perspective because back in July, you made some lows here at about 146. Then you went on to make a little bit higher set of lows in September, about 152. Then you made another higher set of lows back here in December at about 155. And now the stock is up here at 163. Really, with JP Morgan, it's actually in a shorter term uptrend here. For it to break this trend, you really have to get down below, I would think, this grouping of lows down here. So somewhere down here, and more technically, actually below this candle down here at about $152 per share. So you got about $10 or $11 before I'd really be ultimately concerned about this stock. Again, this uptrend, depending on where you want to draw this line, this uptrend is still intact, and maybe it flattens out in the coming days and weeks ahead and the stock finds its footing down here. I actually think that would not be, if you like JP Morgan, would not be that bad of a place to buy this stock. Is as it starts to pull back, I think you should find support on this trend line. Let's say that trend line doesn't hold. Well, you have another area of support down here at about 147 that has held a couple of times. I wouldn't say it's like the most firm level of support, but this level down here at 147 has held for really about a year now. And so I like that from a technical perspective. The other thing that we like with JP Morgan is obviously this company is paying $1 per share per quarter. That's $4 per year on this dividend. That's currently sitting at about a 2.38% dividend yield. That's likely going to continue to grow in the future. When you look at this from a PE basis, from a price to tangible book value, it's not wildly overvalued, and certainly as this stock continues to pull back, that can create nice buying opportunities in JP Morgan. That was JP Morgan. Hopefully you guys enjoyed that one. Stay tuned for more bank earnings the rest of the day. Good luck with your investments.